Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP and 10 million jobs. And it's a very long-term commitment to this mission. We've already been at this for a long time. So this is the 437th free mentoring roundtable. And the first one happened in the fall of 2008. So it's more than 10 years that we've been doing this week after week after week. And, this is just the public ones. We've also got a whole lot of private ones going on every week, which are for our members only. So this online mentoring mechanism we have really perfected and have been using extensively. This event is being recorded. You will find recordings of this and all other prior free roundtables on our YouTube channel, 1M1M Roundtables. You know, our philosophy is case study-based learning. So just by listening to the people who pitch at these sessions, you learn a lot. So whether it's live or in recording, the discussions, the strategic analysis, and the brainstorming around the path forward is a great learning tool. On Twitter, we publish a lot of interesting and informative educational content. Our Twitter handles are at 1M1M and at Romana. And if you're live tweeting today, please use the hashtag 1M1M. These are the call-in numbers. We're not quite ready for calling in quite right now, but this is a roundtable, so we want to hear from you, and please do call in and weigh in and discuss whatever is on your mind. Today, we're going to start with a conversation with Hemant Mohapatra, partner at Lightspeed Ventures India. Hemant, welcome to the show.
Thank you, Shamana, and hello, everybody.
So Hemant, let's start by introducing our audience to the activities of Lightspeed India, the positioning, and a bit of your background.
Yeah, very, very happy to, and then thanks for inviting me here, Shamana. Great platform for everybody to sort of collaborate and learn from each other. Love the idea, love the concept. Heard a lot about you and the platform as well before, so very, very happy to be here. I'll give you a bit of my background first and talk a bit about Lightspeed as a firm and India specifically as well. So I grew up in India and I left for the US in 2003, spent about 15 years there across Austin, Texas, my favorite city in the world, and SF Bay Area, my second favorite city after Bombay. I spent my career mostly as an engineer and product guy across hardware and software companies, 6 years at AMD and then 5 years at Google, joining Google X and then evolving into a product, from a product management role, evolving into a business development and strategy role at Cloud. Spent about 4.5 years there and saw the cloud growth, really take off from 2013, 14 to now. And as part of my journey, I did a bunch of work that that sort of allowed the cloud products to sort of scale up, and a lot of that involved, investments as well as acquisitions. So I got really close to startups during those days, and I really enjoyed my experience there. And as I began investing and acquiring companies, I felt like this could be a career move for me. Why not do it as a full-time job? And at that time, I was losing a lot of my deals to Andreessen Horowitz. And then they came calling in 2018 saying, hey, you've spent 5 years at Google. Why are you wasting your life away? Why don't you sort of join us either an investment in an investing role, or you could join a startup, or if you're doing a startup, maybe that's another way to collaborate. So I figured, I was ready to move to India at the time. Figured let's try the venture capital route. Where else would you do it? If not the Valley. So joined them as an enterprise investment partner there. Spent about a year, and then Lightspeed came by and then came calling, and then things just fell into place. I've known the Lightspeed team a couple of years before as well. One of my investments at Google was a Lightspeed company. So I've had the relationship in the past, and then things just fell into place. Moved back August of last year, and here I'm the sixth partner. I'll give you a bit of Lightspeed background as well. As you know, it's a U.S. vintage firm. It's been around for almost 20 plus years now, but it has mostly been popular with enterprise companies, although we have diversified into crypto, blockchain, consumer, and a bunch of other marketplace type companies as well over the last 5-10 years. And the India team used to be part of Lightspeed US, 2006 onwards. But 4 years ago, India opportunity became big enough and interesting enough for us to raise an India-centric, or I would call it Southeast Asia-centric fund, beginning with India. And we raised that fund in 2013. It was a $135 million fund, and we invested in roughly 20-30 companies out of that. Many of them have become global brands now in hospitality, in edtech, and a few other categories. And then we raised a second fund when I joined August last year. It's a $175 million fund, so a bit of a bump up from last fund. And we invest across all opportunities in consumer and enterprise. We love tech-focused companies that are solving for a very fundamental problem in a space that is humongous and very underserved. Right, and in India, there are many opportunities like that in healthcare, in logistics, in agriculture, many other places. So we feel like the game is just beginning in India. So that's Lightspeed India. There are 6 partners there, including myself, and yeah, I mean, a couple of companies you may have heard of. Oyo is one of the biggest global brands in hospitality today. Growing out of India into Japan, UK, US, and China. Byju's, if you haven't heard of Byju's yet, you will hear about it soon because they're entering US pretty soon. It's an India-based, Chennai-based edtech company, and one of the largest edtech players in the world today, and many others. So that's my background.
Hemant, I'm going to ask you a few questions based on all the things that you said. So $75 million fund, what stage is your comfort zone in terms of investing?
Oh, it's a $175 million fund.
175.
We come in, yeah. So we come in early. Like as we are an early stage VC, so we love our Series A's and seeds. So those are the 2 stages that we come most commonly at. Last year, I think half of our investments were Series seed, so we came in very early, and and then so our check sizes range from $1 to $3 million for a seed, all the way to $10 million for a very, very compelling team that has a pre-product idea. So we would directly do a large Series A, which was Uran, a B2B commerce company that we invested in 1.5 years ago, and now is publicly valued above $1 billion. So yeah. And then we also have a growth fund that we pull out of whenever required for larger rounds, as and when needed. And I think that's $1 billion point. Yeah.
So let's take a couple of the examples that you gave, Oyo and Byju maybe, and talk us through when did they come to you, when did you get involved, and what was the progression of your involvement in those companies? These are obviously companies that have raised a lot of money. So talk to that. How does that evolution happen in those kinds of companies?
So I'll take 2 examples. One is Oyo, and then Uran is another one that I really like talking about. This was before my time, so most of it is not my contribution to the firm and the fund. Other people have done all the hard work here. I want to point that out. So Oyo was a very interesting, it was actually a friend of mine, Maninder Gulati, who was a principal at Lightspeed, I think 4 years ago. And look, I mean, most of us are, either entrepreneurs, engineers, product guys in the past. So we sort of like this bottoms-up thinking about markets and opportunities, right? So he was looking at the hospitality market, and he had done some work on it, and he really felt there were some pretty big gaps in the market that were not addressed today. And that market was essentially around, 2 or 3 star hotels that are super disaggregated in the country. There's no brand there. There's no discoverability platform for them. They can't really put themselves up on Airbnb or Booking.com or Hotels.com. Now, people don't really, the kind of people who go there to book hotels don't really look for 1 to 2 star hotels, right? So he thought that most of India, tier 2, tier 3, tier 4 cities, had a bunch of these mom and pop hotels that had no way to sort of, capture demand online. They had no way to get discovered. And this felt like a technology-based play that, that could become a large company. So he was looking around in the market for a founder who was addressing this. And, I think after searching around, he found this one gentleman named Ritesh, a 19-year-old kid, right? He had just gotten the Thiel Fellowship, and he had gotten into, I think, one of the IITs. I think it was IIT Delhi. And so one of the premier colleges in the country, everybody would sort of kill to go there. He had gotten admissions. But then he also got admitted to Thiel Fellowship, and he quit college. Obviously, that's one of the requirements to join the Thiel Fellowship, and he joined Thiel Fellowship instead. And it came up in the news, and where he gave an interview and talked about what he was doing, and it turned out to be something very similar to what Maninder thought was the gap in the market. So hustled his way into discussing what Ritesh was up to, built up a relationship. We came in very early. I think they had just about 50 hotels at the time we came in, right? So basis that experience, we did all the work basis just this early sort of traction in the market, right? And now they have, I think, 300,000 odd hotels, at this stage now. But when we put money in, I think we put $600,000 check into that early, and then worked with the founder, built up a relationship, saw them through multiple fundraisers they've raised. Don't quote me on this, but I think they've raised over $1 billion now, right? So from the likes of SoftBank and all that. So we've stayed together, lockstep with the founder, across not just capturing India opportunity, but also expanding into China, Japan, UK, and now the US. So it's been a 5-year journey. Bejul Samaya, my partner, is on the board there. And he and the founder are so close that, whenever there's a birthday in a family, his Bejul's kids write a card. This is from us, Mom, and Ritesh. They are that close, right? So, and we love that. We love sort of this kind of founder, board relationship. I think a lot of learning happens on both sides. A lot of trust is built that way. So even though, now the cap table is fairly crowded with very, very large and powerful players, we feel like we still have the founders here. The founders still trust our opinions over so many years, where it's not for the lack of having alternate point of views, but the relationship is still strong. So we like that kind of a company building process. It's our style. The other quick example would be Uran. These are yeah.
Before you go to Uran, actually, I have a question. There are these very large funds like SoftBank that are flushing the market with capital. They're doing it in India. They're doing it in Silicon Valley. They're doing it on a worldwide scale right now. What does that do to the early investors like you with, relatively, 175 million is not a small fund by any stretch of imagination, but in contrast to a SoftBank fund, it's a very small fund. And they're basically flushing the cap table. So what is your point of view about these kinds of scenarios, and how do you play? Do you exit into SoftBank? Do you keep going? What's the thinking?
Yeah, so look, I've not been in a situation where one of my companies is being funded by SoftBank, so maybe you should ask me this question in the future again. Not having been there and, faced the SoftBank juggernaut, what I would say is, a lot of this is, based on the founder, right? I think having a relationship with the founder, a relationship of trust, is where you can, you can differentiate yourself from the cap table. The cap table is what the cap table is. The mathematics you can't really deny. If you don't have the capital to fund $1 billion round, you don't have the capital. But it doesn't necessarily have to mean that you lose power and say in the company. And those things are driven not just by capital. It is driven by experience. It's driven by relationship that you have with the founder. It's driven by trust, the value you've added from the very early days. And those things don't just go away that easily. And that's what we are seeing in OYO. That's what we expect to see in other companies that we have funded.
But if you have a lot of liquidation preferences that are, preferences over your preferences, then, that's something that has to be handled by the, the smaller fund.
Yeah,
and this I'm asking you that in your context, it's happening everywhere. I think this is a problem and I've had lots of private conversations where people don't want to go on the record that are facing this problem. All the micro VCs are facing this problem.
Yeah, so we don't think of ourselves as micro VC. We have a $1 billion+ fund that we can pull money out of if you want to sort of retain ownership levels. So we don't really think from that lens at all. Look, liquidation preferences are what they are, right? It kicks in when there's a liquidity event happening, right? Now, as any venture capitalist will tell you, it's a risk and reward ratio. If you think the risks are too high for you to create liquidity for your LPs, you pull something out of the market. You pull a ratio of what you put in from the cap table and turn your money back to the LPs. And we continue to look at all investments that are scaled to a degree. The liquidity created by that scale is interesting to us as a fund, and we look at those opportunities on a case-by-case basis.
Mm-hmm. So it sounds like when a situation like that arises, your global funds or Silicon Valley fund is bringing in the capital to match the round and so forth. Anyway, we don't need to belabor the point. You were going to talk about Uran. Go ahead.
Oh, Uran is like one of my favorite stories here. They're solving such an India-centric problem, right? I mean, commerce in India has always been so offline, so one-on-one relationship, and they'll call somebody up and somebody will say, well, I'll give you this at this rate, I'll negotiate, I'll deliver here, you come there to pick it up. It's almost like a secret, like a secret science that if you know, if you don't, you just don't. And Uran was funded by three folks actually, very early employees at Flipkart, one of the largest e-commerce companies in India, recently bought by Walmart for a fairly large valuation. And one of the founders was Hemant Mohapatra. He was the CTO of Flipkart, and there were a few other folks, Sudeep and Vaibhav VG, that built the ops and supply chain network for Flipkart. And, so they were very familiar with how this business is operated, right? So they kind of got out of Flipkart a few years ago, a couple of years back, and they said, we want to solve this whole, e-commerce is solved. It's being solved by Amazon and Flipkart. But what about the commerce that happens between businesses, right? It's not just business to consumer. What about business to business? Who's taking care of their supply chain? Who's doing logistics for them? Who's doing discoverability for them? Who's doing pricing for them? And there's nobody doing that in a systematic, tech-driven way. So they built a company called Uran to do that, and they have just scaled up tremendously. I think their overall GMVs are in the billions, and that all happened in the last 1.5 years. I'm quoting numbers from public records here. This is proprietary information. So, and the reason they were able to do that was because, they had the foundations really right. They knew what the pain points were and how strongly they were felt. And when they met us, they didn't have a product. They didn't have, any sort of signs of execution that works. They had a concept and they had a team. And we put in a very, very large check, $10 million odd, into the company at a very, very early stage, right? Mm-hmm. And we took it that. Yeah, so it was a very large round for us. It was, I think it is, given a fund our size, I can imagine it was pretty out there from a comfort zone perspective, right? It wouldn't be easy to expose so much capital into a company that has, nothing more than a very, very clean idea and a very, very strong team. But we did think bottoms up about that opportunity. We did really do our work. We understood that there is certainly a need, and we said, well, this need can only be solved by these guys, and why not go hard and hungry at this deal versus, doing piecemeal? And we did that, and it worked really well.
Now, what is your current analysis of the big problems in India? So in the same vein that your colleagues went and sought out the oil team or founder, what are some problems out there that you are looking for solutions to, or teams that are solving these problems?
Yeah, I'll give you three themes, and there are so many, right? It'll spend an entire hour just talking about that. Three things that personally I find really exciting, besides the obvious for me, which is enterprise, which is going to continue going on. One, in fintech, I think India is way more advanced than most of the countries. Maybe China is the only other parallel that comes to mind. And this all happened in the last couple of years, right? The fintech regulation, the fintech adoption is just stupendous. And now that the basic problems of payments has been taken care of to a large degree by both policy as well as product, the next challenge is around what other financial products would be useful. So lending seems to be another thing where, people need, on a buyer side, they need EMI, for example, on the seller side, they need working capital. So a lot of the platforms are evolving into how do you create more liquidity on both sides of the marketplaces to facilitate exchange of goods and values. So that piece is big. Now with lending comes other challenges around collections and risk and all of that, and there are companies that we built to either solve it horizontally, eventually probably vertically, then if the businesses are large enough, right? So that's one category I'm looking at. Second is around logistics. India doesn't have the best road network. It's not like US, China. Railway network is pretty advanced, but a lot of it is very manual, very inefficient. Supply chains are not really, a lot of work happens when you shift from one state to another, and so on and so forth. Right. So the policy is coming in to make the transfer of goods easier from let's say a taxation perspective, but the actual nuts and bolts of logistics are very inefficient. An example would be when there's no electronic way to sort of confirm receipt of a package, like that comes in a truck. So there are companies coming up figuring out what is an electronic bill. How do you make that foolproof and fraud-proof, right? So that's an opportunity. So logistics as a whole is a big area which is super inefficient but very large addressable market in India. And third is agriculture. Like 70% of GDP in India is agriculture, but it's still done. You still have very, very old technologies used. Essentially, you use animals to till the land, not even tractors. The tractor penetration in India is 4% of the overall, land that is available. Yeah, right. So you would think it would be you can't do anything without tractors, but people do it by hand. People do it with cows and bulls, to till land like that. Irrigation, drip irrigation doesn't really exist much beyond a certain category of farming. So we're thinking about, even supply chain for farming is super inefficient. You have 3 or 4 players before the produce gets to the market, the end consumer, right? So we have village level, aggregators, then you have regional aggregators, zonal aggregators, state aggregators, then national, and then supply goes back to tier 1 cities, tier 2 cities, and then export and import. Like all of this is completely opaque. Who gets what prices? Who does negotiations? Who does supply chain? Where is my good? What are the risks? How do I price it on a daily basis, weekly basis? Nobody has any clue. So the companies who will solve that will probably become really, really integrated into the overall supply chain for agriculture as a whole and become really valuable companies. So fintech, logistics, agriculture.
The amount of wastage in the agriculture supply chain is unbelievable. So.
Yeah, and I actually realized that a lot of the waste is not actually in transportation. It's actually at the standing crop level because of bad irrigation techniques, because of misunderstanding demands, so overproducing or underproducing, or fertilizers are put in wrong at the wrong time, over pesticiding. Things like that is where a lot of the crop gets lost. It is not in the transportation network, which is surprising to me. So anyway.
So coming back to the more mundane topic of enterprise, technology, which is, what everybody wants to invest in by and large in the venture world. What is your analysis of what kinds of stuff do you see as interesting and exciting?
So coming into India, I didn't know really how deep the enterprise startup landscape would be, and it is never going to be as deep as the US, at least for a few years now. But what is interesting is the ambition of the best founders in enterprise here is no less than the ambitions of the best founders in enterprise in the U.S. If you think about it, a lot of the big enterprise companies in the U.S., like AppDynamics, Zscaler, Rubrik, Nutanix, who are these guys? Indian guys, born and brought up in India, studied in India, went to the U.S. It expanded their mind, and then they executed behind that, right? They got the experience that really expanded their mind and never went back to its original size. That is now happening to Indian founders sitting in India. There are companies like Freshdesk that have scaled up to $100 million ARR. It took a long time, but there are a lot of scale.
Incubated in 1Mby1M.
Sorry?
Freshdesk was incubated in 1Mby1M in 2011.
Wow, awesome. Wow, so great. So stuff like that. I mean, this is how.
I think it was a path-breaking company, actually. Zoho was a path-breaking company, and then Freshdesk was a path-breaking company.
Yeah, so Freshdesk is a great example. But there are other newer companies as well that have scaled up really well, really quickly. BrowserStack is an example of a developer-centric company that offers developers a way to check their apps, mobile and web apps, on different kinds of browsers, right? On Chrome's version X or Firefox version Y, and then Opera and blah, blah, blah. And they have scaled to over 2 million developers in the last 3 to 4 years, which is a very interesting scale. This is a scale that GitHub was at when Andreessen Horowitz put a $100 million check into it, right? So that's a fantastic scale. Companies like Postman, they have reached 6 to 7 million developers in the last 3-4 years. These are fantastic scales. All Indian companies, Indian founders, born and brought up in India, right? So something interesting is happening to India enterprise where the founder's vision and ambition have actually crossed borders like never before. And it's not just India to US, it's also India to Southeast Asia, because there's no other enterprise company, there's no enterprise play for Southeast Asia. China is very consumer focused. The big enterprise companies in China are all hardware companies. And the rest of Southeast Asia looks up to India in terms of, quality of talent, in terms of, technical expertise. So it's a very natural fit for us.
Yeah. All right. Very good. Anything else that you want to add before we move to the entrepreneur pitches?
Excuse me. I think I've been an entrepreneur before. I have to leave for my next session, so apologies for not being able to attend the actual pitches. But having tried to do the entrepreneurship journey, having tried to raise capital, I think I really empathize by how difficult the journey is. I feel the best kinds of entrepreneurs, are just so resourceful. They're almost like, the word, but they're like cockroaches. They just refuse to die. They will wait around. They will survive any nuclear disaster. They'll survive the frick out of that, and the market will come to them. This is what happened with Bezos. He was not any less of a founder 15 years ago, 10 years ago, but he IPO'd in 1998. His stock was like flat for till 2007. And 2007, iPhones came up, and everybody had a device to buy things from, and then Amazon just took off. You can see it online. It's public. The numbers are public, right? And why did that happen? Because the founder survived any and everything. He just kept doing his thing, just kept building the fundamentals of his business, and the market came to him. Airbnb, the market was never ready for people to open up their houses. 2007, 8, 9, we tried to raise money from YC funded, but Fred Wilson said no. A bunch of other founders said no. A bunch of other VCs said no. They kept selling Cheerios for Obama campaigns, right? They kept knocking doors in New York to say, well, you are a blue state, right? Would you not support an Obama campaigner coming to your city to sort of campaign for Obama and open your doors, right? You trust them. They did stuff like that. And then 2008 crisis happened. People lost their jobs. In 2009, people didn't have enough money to sort of pay for their rent. Then they were open to opening up their doors to get a stranger come in and sleep in their bedrooms. And the market came to them again. Why? Airbnb just survived everything else. What else there is to do? So I feel like, just stick it out, stay resilient, stay resourceful, find a way. Just find a way.
And be creative in finding the market as they come to you. Very
exactly.
Good. Wonderful, Hemant. Very nice catching up with you. And we'll see you soon.
Yeah, great to meet you, and good luck for everybody who's pitching. Bye.
Bye. Folks, a little bit of expectation setting before you start presenting. This is a working session. and we are on your side. So don't feel nervous, don't feel defensive. You can feel completely safe and comfortable. We'll discuss whatever you want to discuss, whatever issues you're struggling with, and try to help you. If you disagree with my feedback, that's fine too. It's your venture. You can play it whichever way you want to. And, the only thing that you have to keep in mind is that not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. So the story that you heard just now from Hemant about this, team from Flipkart, the former CTO of Flipkart and supply chain guys from Flipkart that were able to raise $10 million on a concept, it happens very rarely. And you really have to have tremendous domain knowledge, differentiated domain knowledge, proven domain knowledge to pull something like that off. If you do have that, then you can attempt something of that sort, but it doesn't happen very often, and people don't have that level of domain knowledge necessarily. So with the kind of methodology that we have come up with, typically addresses a broader set of entrepreneurs who can be successful even without those expectations. So that's what you're going to hear in our programming, in our messaging. We just have tried in every possible way to increase your probability of success. And as Hemant also pointed out, survival. You have to survive to succeed. So survival is really important. We pay a lot of attention to making sure that you survive and don't go out of business. You cannot succeed if you go out of business. Okay, we're going to start with Michael Murguia from Dublin, California. Michael, please unmute your line.
Hello. Great. Thank you very much. Can you hear me okay?
Yep, we can hear you fine.
Okay, fantastic. Well, first of all, thank you very much. The last 20 minutes, half hour has been extremely illuminating. I really appreciate you guys sharing and the opportunity to present this morning. I'm going to jump right into it and respect our 5-minute timeline here. Switching to slide 2, that's my smiling face there. I have a 25-year career in software development, specifically video game development. I've worked on the largest video games of all times for the largest publishers, and I won't go too far into my history. We can save that for later. Overland Bound is founded on the core principle that adventure is necessary, and we operate in the exploding recreational vehicle market. That is our consumer. Overland Bound is a company. We have currently 20,000 paying members worldwide, heavily focused in North America. We have 500,000 followers that is growing quickly. That's on social media. This audience should read that as a lower cost of user acquisition. And then we've enjoyed fairly rapid growth year over year, and currently we generate $400,000 in annual revenue. The company does currently operate in the black. So the opportunity here is to serve this exploding $30 billion growing adventure travel market. We'll look at some numbers a little later on. But this community is unique, and they have 3 core needs. They need a supportive community, because when you're adventuring, if it all happened according to plan, it wouldn't be an adventure. You need destinations to go to with the $80,000 Jeep that you just bought, and that is surprisingly difficult to come by. And also, maybe of some surprise, seamless on-road and off-road navigation is a part of what it is you need, and that's not solved either. But we're going to solve this through our app. You'll see that I've called it Overland Bound 2.0, and that's because it's an extension of our current web platform that is used by our members and has been validated by our members. So we have, for the sake of this conversation, we have 20,000 beta testers that already use our platform, and now we're developing that platform further. Very simply, if you're, I apologize for not saying the slide number. We are on slide number 5. Very simply, the app allows you to connect, plan, and go, and it does it in a very seamless way. Moving on to slide 6. I'm not going to go into all the details of the app in this presentation, but we're already at scale, at least small scale, at 7,000 DAU. So when you download the app, you will have access to this community right away. And there are a number of ways that we solve current problems that aren't being solved by competitors in the market. Going to slide 7, the market size. So the outdoor recreation activity market in North America is $60 billion annually. You have Camping World and Polaris, which are very large enterprises, and the focus market for us is the recreational vehicle market. That's $30 billion, and you can see some growth. In 2013, SUVs, these are the vehicles that we like to outfit. SUVs were 15% of all light vehicle sales. This next year, they're projected to be 50% of all light vehicle sales. And we've sort of, our company has grown with that market. Recreational vehicles are any vehicle that are not your grocery getters. They are specifically vehicles that you have purchased to pursue your outdoor activities. Going to slide. Our market sweet spot. We are a cross section of the 40 million Americans that self-identify as campers, which is great because that's kind of what we do, and the 100 million Americans that self-identify as participating in wildlife activities. So in this case, going to the dog park doesn't count. These are photographers, snowboarders, hikers, anybody who wants to go further and do more in their recreational vehicle. And we feel that conservatively, in North America, our target market is 50 million. Right now, yes.
Just a second. I mean, you're doing market analysis in a top-down format. So are you saying 50 million people, 50 million vehicles, what is this? What is the unit here?
It's people.
People. So 40 million campers, 100 million wildlife activities, and you are looking at the intersection of those two.
Yes.
How can the intersection be more than the 40 million? That mathematically doesn't make sense.
By attracting more, one of the strengths of our community is that what we've seen in our consumer is that people are learning of the focused recreational vehicle market, and it's pulling in more people.
Look. This slide is not presented right? I mean, it's a mathematically impossible slide. If you put a slide like that up, then it raises the question, this is mathematically impossible. So you need to present what you want to say differently. And in any case, the main thing that you need to keep in mind is that from a market sizing point of view, what we are looking for is bottom-up market analysis, not top-down. So your market sizing has to be presented differently. So I'm letting you go on for the moment. I'll just give you the feedback that this slide just doesn't work. You have to repurpose the slide and say what you want to say differently so that it doesn't raise the question of mathematical impossibility.
Fantastic. Thank you. Okay, I will move on. So let's see. Currently, when we do roll out the app, we currently spend $300 and generate $30,000 in monthly revenue. But we know when we start marketing our pro tier subscription in earnest, that won't scale. In the first 12 months of the app, we're going to hit a few beats. We have a targeted list of consumers that are interested, of 80,000 subscribers. We will be marketing to our social media channels as well. We have great brand partnerships, folks like BF Goodrich and others of that scale that love our focus community. And our app has achieved something that's difficult these days, and that is in-app and in-platform virality. So every new member does generate additional members. So we'll focus in this area to drive initial adoption of our platform.
Okay.
If we look at the unfair advantage and what we have as an organization, it's a combination of the captive audience and our technology. Our captive audience, they are folks who are ready for the app and we will market to directly. In terms of our consumer research, they have informed the content of our mobile application and vetted the features that we're currently building. And the technology is something that I am familiar with. It is video game technology that will allow us to do a couple of things. One, there are a couple of competitors out there doing similar things, not many, surprisingly, but we'll be able to do things that are more useful to our consumer that they cannot do without completely overhauling their technology. And we're also going to be releasing features on a monthly, new valuable features on a monthly cadence. So our release cadence will be very rapid. Now I'm going to slide 11. Currently, we're looking for $250K for approximately 5% of Overland Bound. We're very focused on our potential exits, which are primarily sale or acquisition. And acquisition for us is pretty strong because we've had interest in our community and our software already by large companies with a history of acquisition, but this is currently what we're seeking. There's a larger opportunity that would take more time to go through. And that is my presentation. Thank you very much.
So on this slide, a few comments. In fundraising, you never get to dictate the valuation. So I would take all that stuff off. You're raising $250K, and that's really all that matters. Exits are always sale, acquisition, or IPO. So everybody knows what exits are. So that's all, kind of irrelevant stuff. If you have actual exit targets that you want to discuss, that's a different matter. That is what discussing is like. Who do you think are your likely acquirers? That's a worthwhile discussion. But I don't think any of this stuff with valuation and all that you discuss. That's just not part of the etiquette of fundraising.
Got it. Thank you.
So for me, the presentation, what I love about it is that you have $400,000 of profitable revenue. I love that. So I think the real issue is how big is the opportunity, what is the bottom-up TAM, and, so there are things missing. What is the team? All the things missing by way of what is an investor pitch. So you need to put together a real investor pitch. This is not a real investor pitch. It gives me an idea of what you're doing and where you are, so I can give you some, guidance based on that. And but I really don't have a sense of how big an opportunity we are talking about and so on and so forth. So you are saying that you have a market size of 50 million users, and if you take your $300 a month subscription, is that right? $300 a month subscription is what you're projecting?
Can you ask that question again? I didn't quite hear it.
So what is the average subscription fee that your community is paying? $300 a month?
No, it is $60 annually. $60 annually. The $300 is our current marketing spend, which is insignificant. Okay.
So $60 annually. Are you saying that 50 million people will be paying $60 annually for something like this?
Yes.
So then you're going to need to defend that, and you're going to need to create a slide on bottom-up SAM analysis and so forth. So all these things are missing from your pitch right now. So the pitch needs work. The good news is you have some validation. The question that is very, suspect is whether 50 million people really are in your sweet spot who are willing to pay $60 for adventures. Are there 50 million families in America that do adventure travel? I mean, you're talking about SUV owners. They're soccer moms or SUV owners who do nothing adventure about it. They just go to soccer games with their kids. So,
that can be pretty adventurous.
Sorry?
Oh, I was making a joke. I said that can be pretty adventurous.
Maybe, but I don't think they're going to pay $60 per year for your product. That's the issue. So TAM is one thing that you need to work on, and the presentation itself needs some work to make it look like an investor pitch. So a lot of vital things missing, but great. The great thing is that you have $400,000 of revenue, profitable revenue. You have a path forward based on what you've created already, mailing lists and so forth to grow that revenue. All these are great scenarios.
Great.
So congratulations.
Well, thank you very much. I really appreciate it. Thank you.
You're very welcome. Basanth, you're up next.
Hey, guys. Thank you so much for the opportunity. I'm actually sweating a little bit. I'm nervous, but I will give it a
No, don't need to. Just take a deep breath and don't be nervous. You'll be fine. Go ahead.
Sure. Thank you. I'm Basanth. I'm a co-founder of Kulfy App. I'm from New York. Fun fact, I love F1 racing, but I still can't drive. Hopefully soon I could get to drive. We are working on Kulfy App. It's a platform for Indian users to connect with the content in their local language. For example, we only work on short-form content, GIFs, and very short clips. The problem is Indian market is very segmented by the languages you speak. So, for example, you move from one state to another state, it's very hard to understand their, they have their own community, media, celebrities, and it's very difficult to, relate yourself to the content there. So that's why, and to actually show you an opportunity here, just on one day, New Year's Eve, WhatsApp shared how many pieces of content are shared across in India, and there are about 610 million videos and 700 million GIFs are shared in just one day. And even a bigger problem is there are no personalized GIFs. You end up sharing Shah Rukh Khan saying Happy New Year, or you record yourself a selfie and send it out, but there is no real personalization, right? So that's why we want, next slide, please. We want to be a platform where we are the primary source for the language-based GIFs and short video clips. And users can come into our platform to create, search, and share using our platform. And next slide, please. The product is a two-piece solution. We wanted to bring offline and online experiences together. So we have our app that's on Android, iOS, on website. And the real thing that we developed is our own GIF photo booth. Users can come into our studio and create their own personal GIFs or short video clips, or they can reserve our photo booth to come to events and take GIFs for that event, or it could be their wedding, it could be a corporate event. We create personal GIFs for the brand or for the event, and they can start sharing using our app. Next slide, please. So far, we did 350 photo booth events. We took 70,000 personalized GIFs, which users can use to send to their family and friends. And we also use these 70,000 personalized GIFs to feed into our AI. One day, we want to create you take a selfie, and we want to create a 3D emoji of yourself, so which is in the works. And on the app side of the business, so far, users can create GIFs from Indian movies. Once they're in our app, they can go ahead and create GIFs from other platforms, like they can use YouTube or their own videos to create in the app itself. And so far, they shared 75 million GIFs in last 1.5 years, about 5 million GIFs a month. We are only available in one language now, Telugu. We have 110,000 monthly active users, and they spend 7 minutes a day. Next slide, please. Our market size, there are 500 million internet users today in India, right? And we want to concentrate on millennial users, which is the fastest growing internet market in the world. And we want to achieve 200 million monthly active users in 3 years. Next slide, please. We do have competition, but we do differentiate ourselves from our competition. We do have a GIF photo booth, which we combine, which we give localized and personalized content and give rich personal experience when they come into our studios. And we also, once we entered the market in India, we started getting, we were only a GIF app in the beginning, and our users started asking, or even they gave reviews on App Store and Apple Play Store saying, oh, this is such a waste app. It doesn't have any audio. And then and we started educating our users, hey, this is a GIF. It doesn't have any audio. And then they started telling us it will be better for us if you actually give a video, for example, Shah Rukh Khan saying Happy New Year, rather than him just like instead of users typing text Happy New Year. So that's where we differentiate ourselves from competition as well. We have video reactions. And we also created our secret sauce for our business is also multilingual search. You can search in Telugu or Hindi and you get appropriate results, which none of our competition is doing. I want to highlight these 3 things. And you could see we have API integrations, we have a keyboard, and we are available in Slack as a bot as well. Next slide, please.
So here's a few questions on the competitors. So Giphy is 150 million. This is a U.S. company or an Indian company?
It's a U.S. company. It's a U.S. company.
Yeah.
Yes.
So Giphy is kind of your comparable, so to speak, yeah?
Yes, absolutely, yes.
And how do you know the revenue level of Giphy? What is the revenue model of Giphy?
They did not make any money so far.
Whoa, $150 million funding and no revenue, and you don't make any money either.
I would like to. We can go to the next slide, and I'll show you some revenue how we make it.
Okay, all right, good.
Adoption strategy. We ran few campaigns on YouTube. We get to storytellers in YouTube, and then ask them to introduce our brand into their story instead of just telling users, hey, download this app. So we were able to achieve a 4-cent download rate for our app, which was really good for us. And we do have content partnerships with movie studios in Telugu and TV networks as well, and YouTube storytellers as well. And we are working with sports leagues, especially the Kabaddi League. It's in the pipeline that we're working with them so they can create their own content in our platform. And we do have distribution partnerships as well with Daily Hunt and APUS browser. They both have a combined DAU or daily active users of 30 million. The business model for businesses, Kulfy is a distribution platform across mobile messaging services. For example, they can share GIFs. And we primarily do that with our GIF photo booth. In 15 months, we have $75,000 revenue. The first year, for first 6 months, we only made $25,000, and last year we made $50,000, which is 2x. We do both B2C and B2B events. We do weddings, we do birthday parties, and we also go for corporate events. For example, their happy hours or their yearly corporate events. We have a photo booth in Hyderabad and Bangalore. And we do have amazing clients and more as well. We are a primary vendor for Amazon. Any event going on in Amazon, they contact us, and we go there to service their event. And we are also working on content as a service. We want to give out our APIs to WhatsApp, Facebook, LinkedIn. These days, WhatsApp has a gift feature, Figs, all these big platforms have that. And we want to be part of every user's day-to-day life where they can share gifts that are relatable to them. And we are working on automated content marketing for small businesses in social media. For example, what we want to do is we're running a pilot here in New Jersey. We gave our photo booth to a dental practice. So every time a customer is happy or leaving the dental practice, they take a gift and they upload it into the dental practice social media. And in return, they're getting more social value, and their users, their customers are actually advertising for the dental practice. And it's been going really good, and we want to expand that. Next slide, please.
So can you talk about the 75,000 revenues? What is the breakdown? How much of that revenue is coming from corporate events? How much is coming from private events like weddings and stuff? What use case is monetizing best for you?
Corporate is more, I would say about $45,000 is from corporate because they're our recurring customers. For example, Swiggy did over 50 events for us. Amazon did about 10 events. So more recurring revenue comes from corporates, and weddings are in season. So if there is a wedding, in India, we have wedding season. So during the wedding seasons, we do get some revenue out of there, but we want to start concentrating more on our corporate clients because it's more revenue.
Basanth, my first reaction to what you're describing here, first and foremost, I love the fact that you have revenues. You just showed me a $150 million competitor who has no revenues. That's very scary for me. I don't like companies that don't have revenues. So I like the fact that you have revenues and that you're thinking about revenues. So I prefer that you build a company with revenues than this kind of, wild goose chase of just finding users and expecting VCs to fund you. So congratulations on that. I like that very much. Now, then comes the question of where do you place your bets? It seems to me that if corporate is where really there is repeatability and revenues, you should put all your energy on building up corporate clients and creating, the proper business processes to be able to close those corporate deals, right? So if your primary use case that monetizes the best is corporate events, then let's look at what is the TAM for corporate events based on your pricing and experience of the business model, pricing model, et cetera, and see how big a company can be built. And then you kind of repurpose your entire storyline around that. Okay,
I understand that. We are 3 founders. We went to same high school in India. This is our fifth project together. The first 3 were failed, and our most recent app before we started Kulfy is 1M app. It's a social networking app for Telugu people who are living abroad. We have 75,000 users, registered users just from US. That's about 7.5% of the market. And while we are working on this particular project, users started asking us, hey, give us gifts. It'll be really nice to talk. And then when we went and looked for Telugu gifts, there are no Telugu gifts. There is no platform that's actually doing it. And that's why we're like, okay, we have a bigger market here. Let's come and capture that. Next slide, please. We are looking for 18 months of financing to expand our gift photo booth to 10 cities and 10 languages in India. With that, we would be able to achieve 1 million MAU, as well as we want to serve 2 million Kulfys a day and invest in, that's the ask.
So I have the same comment to you is you don't decide on valuation and percentage and so forth. So take all that stuff out. And I'm going to go back to your first slide where you showed the distribution of languages. So if you look here, you're saying there are 81 million users who are Telugu-speaking users.
Yes.
So why does it make sense to go to 10 languages and go broad and 10 cities and not really fully flesh out the Telugu opportunity first?
Oh, that was part of the plan. And It's a great question, and I have to think about it, and I'll come back with a proper.
Yeah, because it seems like you have the Telugu product, you have the Telugu market already moving, and you can monetize the Telugu market. It's concentrated, right? Telugu is concentrated in a region, so it's a lot easier to build a business in that region, and instead of having to manage the complexity of managing a cross city, multiple cities, and all that is much more complex. So if I were an investor looking at this, I would want to see the TAM for Telugu. And I would like to know how much of this business can be built on Telugu alone before we go anywhere else. So you have some strategic repurposing to do, and then you have some pitch repurposing to do, because your pitch is not an investor pitch. Again, you need to learn how to do an investor pitch and build that investor pitch, and then we can see what are the prospects of funding.
Okay, sounds good. Thank you.
Okay. All right. Good that you're getting revenues and you're thinking about revenues. I like that very much.
Awesome. My last question was, I was going through, next slide, please. I was going through the 10 things that you talked, and then I read about positioning, and it was a single sentence there, and I really didn't understand. Can you explain more on that one?
Yeah, you need to learn how to do positioning, and it's not possible for me to explain positioning like that, just like in 2 minutes, but positioning is what drives a lot of the question that I just asked you about Telugu versus multiple languages. All that is, those are all positioning related questions. So my recommendation to you is, if you want to learn positioning, just hang on. I'm going to talk about how to use the 1M resources in a moment, and you can you can take any of those resources and learn positioning.
Sounds good. Thank you.
Hang on, and I will point that out to you in a moment. So, folks, if you like what we're doing here, please bring serious entrepreneurs into 1M, and I think the two that we work with today are both very serious entrepreneurs. Both are delivering, very serious revenues and a path to building an interesting business. So these are the kinds of entrepreneurs we want to work with. And it takes a long time to build a sustainable business. So that's why the word serious is in bold. So resources-wise, everything is at 1mby1m.com. If you read the blog, you'll learn a lot, and that's free. The Entrepreneur Journeys book series has case study-based books on different topics. And yes, there is one on positioning. So you can just download the ebook, or there's a physical book as well from Amazon, and you can learn at least some of positioning through that book. And whatever else you need to learn, there are different options on the book side. These roundtables happen every week, so you can come to these roundtables and use that as a learning platform. Yes, books are all available from Amazon. Adam Porter is asking me about books. They're all available from Amazon. The full acceleration program from 1 million by 1 million is 1M Premium. We offer you extensive methodology guidance, project-based coaching and mentoring. We have an online curriculum where, again, you can learn positioning, bottom-up TAM analysis, all these things that, how to do pitches. All of that stuff is covered extensively in our curriculum. And you get coaching also on a regular basis. We help you also in the cases where we have relationships that might be able to help you move forward. We help you with connecting you into our Rolodex for business development, whether it's customers, channel partners, and also investors. We are extensively connected into the investor community, and we'll help you prepare for investors, and if you qualify, we will also introduce you to investors. And then media relations. We have a lot of clout in the media. We can also get you known out there, which is an important piece of the going-to-market strategy. I recommend that you look at the 1M self-assessment. This is a questionnaire these are the questions that investors would ask you. It looks like both of you who pitched today are looking for investment. Go through the 1M self-assessment and see how much of these questions you can answer, where you get stuck. If you get stuck on methodology points, you can go do 1M Basic. It's just $99 a month, curriculum only, just study, go and fix, plug your knowledge gaps. And that will take you a long way in the direction of becoming fundable. So anyway, dig around on the website. There's lots of information about what to expect from the various programs. And in Premium Basic, there's FAQs, video FAQs. You can pretty much get all your questions answered through the website. The curriculum is described in detail. It's a case study-based curriculum. We have over 1,000 successful entrepreneurs case studies, and these people are part of our network. So you learn from people who have done it before. Our methodology is lean, capital-efficient, bootstrap startups, and the philosophy is bootstrap first, raise money later. And you can also get media coverage through this program because of our clout in the media. Upcoming free roundtables, there are 4 in April, so pretty much every week in April you have roundtables. We also have in-person rendezvous where you can come and meet me in Cafe Boroni at Menlo Park. If you're local or if you're visiting Silicon Valley, make this a part of your networking events, and you can meet me, you can meet some of your peers, and it's always a small, intimate session where we can talk about your business and answer your questions. That's it. We're ready for Q&A. I will start taking, I know some of you have already typed questions. I will start answering your questions, and you can call in and, ask questions, weigh in, whatever. While you're doing that, let me also introduce you to Irina Patterson. If you have questions about the 1M program, Irina is your contact person after this event. Irina at 1M1M.com, and she will be happy to answer any questions you might have. So the testimonial on your screen is from Vikrant Mathur, co-founder of Future Today. And Vikrant's company has just got acquired by Cinedigm for $60 million. These are 2 bootstrap founders, not one penny of outside financing. So it's been a fantastic outcome, but it took a long time. They've been at it for a long time, and we're thrilled absolutely that it all came together for them. So it's a fantastic case study of bootstrap entrepreneurship. Okay, let's see. I see some questions. So don't send me private chats. Please put your public chat to send to all participants so that everybody can see your questions, and I will be answering the questions as well. So here we go. Adam Porter Blake, you sent me a few private questions. One is about books being available from Amazon. Yes, books are all available at Amazon. And your second question is your premium only on a per business basis? That is, I have more than one startup. Yes, we prefer it to be on a per business basis. It's very difficult to handle multiple startups with one membership. You decide which one you want to work with us on, and use the premium program to work on that. Because there's a progression involved, right? Every time you pitch something, we give you feedback. There's, by the way, on the curriculum, you can apply it to any startup, right? If you have 15 startups and you learn the curriculum and you apply the methodology to 15 startups, no problem, go for it. So that's the way to resolve the question that you're asking. Bala Saravanan Venugopal, I like to hear your views on software patents. If there are patents on a broad idea, but if this idea is not applied to a specific industry or a specific market, is it worthwhile to even embark on MVP development? So these are very specific questions that you should talk to a patent attorney about. I mean, I'm not a patent attorney. I'm not, qualified to answer your question. But all I can tell you is that the software business is largely execution-driven. Patents don't come into play unless you have some very deep intellectual property that you can protect through patenting, and then you're going to, when somebody infringes on that patent, you need to go fight some sort of a settlement suit around that. And that's really not the mainstream of how business happens in the technology universe. So that's about all I can say on patents. Anybody else? Any other questions, comments? If you would like to call in, you're very welcome to call in as well. Just let us know. Any other questions, folks? If not, we're going to adjourn and get going with our days. I have a very full day ahead. Michael, you have a question. Go ahead. We cannot hear you, Michael.
Hi, I was vigorously typing. Thank you for taking my question. I was wondering about your perspective on funding or not. Like in our case, we're operating in the black. We've had this, contracted growth year.
So I cannot hear you. Somehow you're breaking off, but I will answer the question on funding or not. So this is... Michael, we cannot hear you. Your line somehow is corrupted. But I will answer the question on perspective on funding or not. If you have the option, we have to first check whether you're fundable or not. Then comes the question of whether to pursue funding or not. So you need to, assess. You need to go prepare an investor pitch based on which I'm going to assess whether you have whether fundability is even an option. If it is, then we can make the decision of funding or not and when to pursue funding. Overall, as I said, our philosophy is bootstrap first, raise money later. The more validation you have, the more likely you would be able to find funding. That's my take. All right, folks, we are going to adjourn for today and look forward to seeing you next week. If you're planning to pitch, go ahead to the website, the free public roundtables page, and register, and Maureen will be in touch with you with instructions on how to get ready for pitching. Thank you very much. Bye-bye.